Alright guys, good evening. It's 9:30 p.m. on Wednesday, December 6th, 2017. And I hope everyone's doing great. And again, I apologize for not making a video recently. I continue to get some new subscribers to the channel. Granted, it's not a ton. But really guys, let me hear from you if you want me to do more. I mean, I don't know how many of you actually sit and watch all these, but if you're interested, besides just watching, if you're interested in having me post more often, just let me know. If I don't hear from anybody, then I just assume everybody's good or you're not really interested, and so I just keep doing what I'm doing every day, and that's fine with me. But I'm more than happy to do them as well. So leave comments under the video in the comment section, or like it, or ask questions, or whatever, and just let me know. Okay? You're enjoying it. Anyways, I just want to make this video regarding the Canadian dollar. We had some major fundamental news this morning come out, and I just wanted to touch base on that. Now, basically, the Bank of Canada, their position has basically been they hiked rates recently, and once or twice, and the market basically took it as okay. They're going to be entering into a hike cycle, and we're going to see lots more hikes. So the Canadian dollar, last couple of months went on a pretty nice run, until the bank came out and basically threw some water on the fire, and basically told the market that, look, yeah, we raised them a couple of times, but that doesn't mean that we've ended in terms of accommodative policy with low rates, and that everything's going to be very data dependent as we go, and we're still going to be cautious and all that. And so we saw the Canadian dollar after that go under pressure. In the economic news that's come out on the Canadian dollar, the last couple weeks has been a bit up and down, which kind of feeds into the bank's policy that they're going to be data dependent. So last Friday, which is what we're looking at here, last Friday, December 1st, we have the Canadian dollar employment number. And of course, this is a very important figure to them, because next to inflation and GDP, employment data is really probably the three main things they're going to look at in terms of whether they're going to keep interest rates the same, or hike them, or cut, or whatever. So you can see that we had this employment change really just smash the expectations. I mean, way above. They were expecting about 10,000 jobs created. There was almost 80,000. GDP came in slightly higher than expected. The unemployment rate dropped. So I mean, all good news. And if you went back and looked at your charts for any of the Canadian pairs last Friday, you'd see the Canadian dollar really took off and went on a nice tear, really basically at least through the weekend into Sunday and Monday of this week, before things kind of petered out ahead of the decision today. So then if we go to today, let me see if I don't know if I'll be able to get this on here. Let me see. Yeah. So this morning we had this decision. We had the Bank of Canada rate decision. So this was their cash rate decision. As expected, they held rates at 1%. They were not anticipating a hike. There was about, I think the last number I saw, about 18% chance of a rate hike was priced in. So if they had come in with a rate hike, we probably would have seen the Canadian really supported, because for the most part it would have been unexpected. Now the percentages over time into next year, the percent chance of them raising rates goes up substantially, but just dealing with the here and now, it pretty much was expected they were not going to change rates, and indeed they didn't. So as usual, when that happens, you have to look to the statement that they put out with it. And if you go to Forex Live, whoops, that's not Forex Live. If you go to forexlive.com, and again guys, if you don't regularly check in on this site, you need to. It's a terrific free real-time Forex blog that's just full of fundamental stuff. from a handful of their analysts, and there's also a little bit of technical stuff on here too. But if you go here and you go into their must-read column and you click this Bank of Canada story, that's this, and you can see the summary of the statement that was put out today. I'm not going to read the whole thing, but basically, when you get down here in this bold where the writer put in, this is less hawkish than feared. And if you read this paragraph, this was the final paragraph of today's release, and this was the final paragraph of the last time when they hiked rates a couple of months ago, and you see they're pretty much the same. We basically said that there's still some uncertainty and that monetary policy currently remains appropriate, and that they'll probably will hike rates over time, but everything will continue to be data dependent, on growth and inflation. And that's almost exactly what they said the last time. So as the writer put, it's essentially no change in guidance. So the market took that as kind of disappointing. I think based on the employment news, especially that came out last Friday, if they weren't going to get a hike, then they were at least expecting a more hawkish statement, and they did not get it. And so the bank continues to be cautious. So if we look at the charts, let's see here. Here's the U.S. Canadian, and you can see, this is when the news came out, and once the statement was digested, we just kind of took off. Now, the U.S. dollar is also still being supported by the kind of the positive sentiment with the economy, and with the hopes that the Republican tax bill does end up being finally approved by Congress, although it's still a long way from being law. And so but really, if you look at all these Canadian pairs went up. It really doesn't matter which one you look at. All of them were supported, and the Canadian yen here. Oops, let me zoom in a little bit. Here's the Canadian yen. This is a 3-hour chart. Go to the 1 hour. This is the news right here. So again, the Canadian was definitely under pressure. And all these pairs right now are just, we're in the Asian session, obviously, so we're consolidating and correcting. But these will continue down, I think at least through tomorrow. We can see the CCI indicator down compressed, now going up spread apart. That's a classic corrective move. Expect it to continue down. Now what we have here, whether this is some kind of Elliott wave trend, 1, 2, 3, 4, 5. We can anticipate a bigger move, a move down, or we zoom out a little bit. This might be 1, 2, and then 1, 2, 3, and 4, and then 5 of 3. But either way, we've got more downside. And if this, let's say this high right here was the beginning of the wave 3. That's 103 pips. So even once this wave 4 ends, let's say it continues to go up a little bit overnight, expect this to go down, 100 pips. That takes us down around these recent lows. Let's see how long this wave 3 has been. Yeah. So actually, if this is wave 1. I just want to measure this. I just want to get this from an Elliott wave stamp. I'm sorry, guys. I didn't do this before. It's about 103, and then off of here. Yeah, I think we're probably still inside of wave 3 here, and we're at about 115, 108 right now. So we'll probably go down a bit more. So I am anticipating that the Canadian, based on the Elliott wave patterns, will continue to go down, and certainly on the fundamentals. I think it's disappointing. I don't think it was overly bad, so really, I would anticipate for a couple more sessions we may see it under pressure. But I think at some point it'll kind of bottom out, and traders will kind of look at it and say, it wasn't that bad, and we'll just keep watching the data. And if the data keeps coming in strong, we'll definitely see the Canadian supported, not only based on the data, but also on the fact that that's going to give the market reason to believe that the Bank of Canada will hike the next time they meet. So I just really wanted to point that out, guys. Again, I'd look to enter the Canadian dollar short, or obviously long on the crosses, and on these pullbacks, especially through, I would say, especially through tomorrow and maybe early next week. And but keep an eye on the calendar for any other Canadian news that might be coming, of importance. Although I don't know if there's anything really of remark coming up here, but keep an eye on it, because the market will be looking for a reason to cut this downtrend off. But again, guys, the news was not as hawkish as expected, and so that's what caused the sell-off, and probably will continue to do so. So again, guys, just very important that you keep an eye on the fundamentals, kind of understand what these central banks are looking at. And not only will it tell you what the important data points are to look at, because not everything on the Forex Live, on the Forex Factory calendar is important, even if it's in red. There are certain things that are on here that are just not going to make any difference because the market's just not interested. And, for example, this was last Friday, we had manufacturing PMI for the British pound came out. Well, normally during normal times this probably would be an important feature, but, with the British pound, the market really only cares about Brexit, what's going on with the Brexit negotiations, with the euro, with the European Central Bank, and with maybe on employment and inflation data. Something like manufacturing PMI, I probably don't care about. So that's just an example of something that normally, even just because it's red doesn't mean it's important. So this is another famous one, unemployment claims for the US dollar. This comes out every week. It's always red. You can pretty much ignore it, because the only thing that the market cares about really with US dollar employment is non-farm payroll, which only comes out once a month, and the associated data points. So that's what I mean. Not everything in red is important. Not everything in orange is unimportant. So it just all depends what the market cares about, and that is usually driven by what the central bank for that currency cares about. So that's the importance of knowing your fundamentals. So in addition to your technicals. And like I said, I use Elliott wave, and that's kind of what I go by in terms of determining targets for when I do finally enter trades. But whatever system you use, as long as you think it works for you, that's fine. Like I said, I prefer Elliott wave for many, many reasons I've discussed, not only because it's a technical strategy, but it's a psychological strategy too that takes greed and fear into account in the market, and no other technical strategy does that. So anyways, but that's my soapbox on that. But the fundamentals are what drive the prices in the end, not technicals. So anyways, guys, so that's it. I hope you enjoyed it. Like I said, comments, questions, let me know. And for the rest of this week, I don't think there's anything coming up really of much importance during the Thursday session. Let me just bring that back. So here we are tomorrow. Yeah, unemployment claims again, not important. Draghi speaking. Well, that always has potential due to a press conference presented by the bank. I don't know what he's going to be talking about. If it's not monetary policy related, probably not going to do anything. They have it in red because it's Draghi, and he can always move the market, but I don't anticipate that's going to do much. So really, the next big thing will be on Friday is. Again, is non-farm payroll on Friday for the U.S. dollar. That always has potential to cause volatility. And again, we have British pound manufacturing production on Friday. Again, I don't think this will do anything because, again, everything's focused on Brexit right now. But it may have a short-term scalping opportunity, but it's not going to drive a trend or anything. So anyways, guys, again, that's it. I look forward to talking to you again. Maybe I'll try to make a video ahead of non-farm payroll tomorrow if I get the time. But if you have any questions, let me know, and I hope you have a great rest of the week. Thanks.